Good afternoon. This is Deines with your midday grain comments for Thursday, January 7th. Today on the Chicago Board of Trade, we've got corn trading down 1, beans up 1, and wheat up 4 currently. We've really seen some outside markets put pressure on the commodities today as the S&P 500 is weaker. We're off another 2% today, which has put us down 6.2% since the start of the new year. So that's continuing to struggle with the grain markets as well. And a lot of this has been brought on by the Chinese stock market, which was halted for a second day in a row today after hitting its 7% down limit. And really, this indication has really caused the central bank in China to weaken their currency, which fell to new 5-year lows today. And that essentially makes our commodities more expensive to them. So we're really starting to see the Chinese market affect our outside markets, in turn affecting the grain market as we move forward here. A few other key things that we're looking at today, obviously Brazil weather continues to be on the forefront of everybody's minds. Both the Mato Grosso area and other parts of northern Brazil have been tracking some of the accumulated rainfall and really seeing where we're at in regards to the 30-year normal for the entire growing season. There's been some concern as of recent that we've been falling behind that pace, but there's been a recent uptick in rainfall across northern Brazil, and with the 10-day forecast looking wetter now, the accumulated rainfall totals have been very near last year's level and is certainly expected to blow past last year and approach the 30-year normal average by the end of this next 10 to 15 days. So it certainly feels to be a non-event in Brazil as well now, with the weather feeling a little bit wetter, that we won't have any concern about dry weather in the Brazil area. So we certainly will look for that to not affect the bean markets in a positive way here coming forward. The weekly ethanol production numbers were released today. They were at 4,000 billion bushels per day, and ethanol stocks rose to 21 million barrels, which is the largest inventory build we've seen in a year. And this large decrease in gasoline demand contributed to the overall increase in stocks. So as we're starting to see less of that gasoline demand, we're building more stocks in ethanol, and that's really pushed ethanol futures to new contract lows again in the overnight trade overnight. So again, also not very supportive to our corn market as we move forward. Export sales were also released today, and overall the market just continues to lack demand. Soybean sales were near the upper end of expectations, but we were at the second lowest total of the marketing year. Corn sales were also fairly low, coming in at the second lowest level of the year, and wheat export sales were at the lowest sales of the year so far. So again, our demand picture is looking a little bit bleak here as we move forward, expecting there to be pretty choppy trade until the report that's coming out next Tuesday on January 12th. We do need to pay attention to the funds as they are at a record short right now, and we may see them attempt to get a little bit of a short covering rally before that report, although with everything that's going on in the demand world and in the outside markets, that certainly is challenging any sort of rally that we may get from that short covering from the fund. So we'll continue to pay attention to that, and we'll start to see some more expectations regarding the report that will be released on Tuesday. So we'll check back with you again tomorrow, and hope you all have a great afternoon. Thank you.